Hello again. In the first video, we have seen what is a candle and what are candlestick patterns, how to draw a candle, and what are the critical components of a candle, like high, low, open, and close. So, having understood that concept, now we are going to explore the first pattern in this series, which is hammer pattern. And I will be including more single candle patterns in the first part of the series, and then subsequently I will add more patterns that are combinations of two candles, three candles, and so on. That's how the series is planned. So I welcome you all. I hope you enjoy this video. Now, what is an hammer pattern? An hammer pattern is a supportive pattern which indicates the reversal. For example, here you see the trend is downtrend, right? It has fallen, it has got up a little bit of consolidation over here, and then it continued to fall. Then there was again some consolidation, and then there was a sharp spike to the bottom, and then it got up again. Now let's zoom in to understand this particular single candle alone. So what is this? This is called an hammer. So what are the conditions of an hammer? Let's see that. The preceding trend is a downtrend, right? And then it just made a large spike, which means the wick on the downside is absolutely big as compared to the body, right? The body is very small in this particular candle. If you see, the body is very small, but it has a very large wick and absolutely nil or a small wick on the upside, right? So this is an hammer. What does a hammer indicate? An hammer indicates a potential to reverse the trend into bullish, right? The previous trend was bearish. It made a spike, it came back, it pulled. And if you look at a hammer, it actually looks like an hammer. That's why it's called a hammer pattern. You just take a hammer, you see that the top is like the mass is at the top, and then you have this handle, and it looks exactly like a hammer, right? So, how do we use this to our advantage? We can actually take advantage of this hammer pattern in couple of ways. One, um, as you consider the hammer, the previous candle you got to go, and probably around here, I would say this would be the previous body's. No, maybe if you want to play a little safe, you can also take it to the peak of this and keep it over here. This is the previous candle's high, right? So you can keep it around here. And as soon as the next candle breaks it, it shows that there is a reversal opportunity, right? And at any point in time, if this candle turns red and then breaks this, then this hammer should not be considered. It's not about just the hammer formation alone, but what happens after the hammer is formed and how does it correlate with the previous candles is also to be considered in order to make a wise decision, right? So this is one typical example. After the hammer is formed, it broke and then it made a peak, and then you can see the beauty here. It comes back to the same levels of this peak and then it reversed one more time. And when it reached the hammer second time here, you see, again it got rallied, right? Once this hammer is broken, then the trend may continue downside. But for this particular segment, yes, the previous trend was downtrend. It formed an hammer, and from there we got a exit. I mean, we got a entry because it crossed the previous candle's high, and you can continue to trail your profits. So, what should be the stop loss in this case? You should probably keep this one. It's up to you. You can decide whatever is your risk reward ratio. You can appropriately plan. But typically, you can. Some people place it here. Some people say that okay, I will wait till it breaks the low. So it's all up to you whether you want to use this blue line, the middle one, as a stop loss, or you want to use this as stop loss. It's absolutely based on your risk reward ratios. But principally, I would be going with the middle one. So that's how you read an hammer, right? Let's see more examples. Now let's explore Nifty. In Nifty, can you spot an hammer here? I give you a couple of seconds. Maybe you want to pause the video, you can pause and then find where the hammer is. Right? I'm going to say the answer. Here is the hammer. You see the preceding trend is downtrend, it retraced and then it came down. And as soon as it made this, long wick, see the next candle, it broke the previous one, and then you got an entry. And when it came down, it did not break this one, the middle one, which I considered in the last example. It did not break that. You can see that very clearly. It took support over there and then it went up, right? And as soon as it breaks this, then this hammer should not be considered any further. So these are the things to keep in mind, right? All right. I'm going to show you next example in crude, and let's see how many of you get it right. So can you spot the hammer in this chart? How many hammers are there in this chart? So pause, observe carefully, and see how many you get right. The most genuine hammer in this chart, I'm going to reveal, is this one over here, right? It had a very nice downtrend. Here you got a very long wick, very small wick on the top, which can be ignored, but the real body is at this level, very small body here over here, and then it breached and then crossed the previous candle's high, which is this, confirming that it is going to reverse. And as soon as you see that, it started firing up, right? Now, some of you may be wondering, can I consider, yeah, let's go here. Can I consider this as an hammer? Now, if you look at the previous candles, this is not a downtrend, right? This is not a downtrend. It is only in a consolidation zone in which it is coming down and forming an hammer. Now, this need not be considered as an hammer. It has to be a genuine fall like this, right? This is a genuine fall. From here, there is a pullback, right? So only when the trend is genuinely downtrend and then a hammer is formed, it can be considered. Not at the consolidation phase or in the uptrend. That's a different pattern. We will talk about it. But a genuine hammer is only when it is on the downtrend and it takes a long wick, comes back and then forms a small body, and the next candle or the subsequent candles break the previous candles of hammers high, and then it continues to go up. That's a confirmation. You can plan your entries and exits. Let's see another example in Reliance. Okay, I pause for a minute or two. Maybe you can do that. I can wait for some time. Find out all the all the hammer patterns in this chart. All right. I'm about to reveal the answer. So let's go one by one. Is this an hammer? Of course, it's an hammer, but the preceding trend, as compared to here, it might look like a downtrend, but it is not, because the previous rally was like so massive. This is not a downtrend, but this is a hammer for sure, right? You may want to consider this, or you may choose to ignore for entries and exits. That's up to you. Basically, this is not a very genuine, hammer. What is the most genuine hammer over here? Can I call this red as a hammer? Absolutely not, because the body and the wick are all of same length and it has not pierced through and all. It's just a small indecisive candle, and then there is a significant momentum candle over here. So this is again not a hammer. So where else can we see? Is this an hammer? This is an This is again another pattern. We will talk about it in another video. But this is not an hammer because it's the trend is uptrend and then it has just got some retracement, but then it continued to rally up. So this is again, you don't have the conditions met. The previous trend is not bearish, and it is not made a large spike at the downside, and this cannot be an hammer. But here is where the most genuine hammer is. Look at this. After the rally from here to here, it has just come down significantly and made a good reversal trend. And the previous trend, if I have to consider, this is definitely bearish, on which you have this long wick followed by a small body, and then it broke this previous high and then it continued to rally up. So very good indication of reversal, right? Let's see one last example of Euro USD. And can you spot the hammer pattern on this? So, is there a genuine hammer in this? All right, I'm going to reveal. The most genuine hammer is over here. Let's zoom in and see that. The fall was pretty evident. It is a downtrend, and then there is a large spike at the base, and then it has made a almost too small body, which is also called as a doji no pattern. We will talk about it. It's a doji hammer, right? So from there, it made a high, but it did not cross the previous ones, right? And then in this candle, it broke. So there we got the confirmation. The trend is upside. Probably would have entered here. And when it came down, we need not have to panic. Our stop loss would be around this level, right? And from there, it continued to rally and it never came below this level. You see the beauty of this? That's what an hammer is. It helps us to make very wise, sensible decision when it comes to taking trades. And you can plan your stop loss, you can plan your entries and exits, risk reward ratio, and so on. So this is one of the several important candlestick patterns that one should be aware of. I hope you enjoyed this video, and I will be coming up with more patterns in upcoming weeks. Thanks a lot for watching.